Guys hear me? All right, sorry. I had no idea I had to join with audio separately from starting the meeting. So bear with me, guys. I'm sorry. This is my first time doing this. So I will go over what I just said again. Going over my end of the week bias first. So as we know, daily and weekly, we are looking at, power of three. So last week we had open, high, low, close framework. We had, our Judas swing, our accumulation above opening price here into a week, a PD array in term of a weekly fair value gap, as kind of expected. And then we took out previous week low. Now, why was I looking for bullishness on Friday? Thursday, I was wrong. I got that. It's okay. I didn't take a trade though. But Friday, I was looking for elasticity in price, for price to come back and close above this order block. This is a very clean, very large candle. So I was expecting price to respect this on the weekly close because we already had a relative objective hit. We took out this liquidity pool from previous week low, and then we took out this liquidity pool that used to be existing. News delivered at a sell side liquidity pool. That was another indication. That's why I took my trade. And let's get into this upcoming week, and let's start with the news. So main focus for this week for me, obviously, is going to be this right here on Wednesday, Fed funds rate. Last through CPI, we had an address where people started talking about 75 basis points and 100 basis points. And, going forward in the week, we're going to have to consider what has been priced in based on, just market sentiment. And, we're pretty much guaranteed, and I don't want to say guaranteed, but we're strongly looking at 75 basis points minimum. A lot of gossip around 100 basis points. So coming to dollar, this double bottom for me is still a point of interest. Early in the week, I'm going to want to see them drive dollar down, whether it be through Asia and London session. Today we can see them go up a little bit prior to the beginning half of the week, but I want to see them move down here. Ideally, I want to see these two liquidity pools swept, even though last week prior to CPI, we did come into discount just barely. You can see right here, we did come into discount. So do we need to come back here? This is still inefficient. I would love to see this come back and revisited right around Fed funds rate and FOMC. If we can deliver into this area for FOMC, like that would be so beautifully put together. And I would definitely be acting on that, looking for higher prices. Why would I be looking for higher, stronger dollar? As we know, interest rates are huge, like one of the biggest drivers of the market, if not the biggest driver of the market. So pushing the US interest rate up higher, as we've been seeing, will further exaggerate the dollar strength against the pool of currencies that it's standardized against to get this number. And then assuming, we do see that strength, I'm looking for a close above this weekly fair value gap. We can hop into the daily real quick. If we don't get the delivery I want, because I know this is a huge target for 3 days to come back down into this weekly fair value gap, I am just looking in this area. Why am I looking in this area? Obviously, we still have this daily fair value gap that has not been hit. Hey, thank you for joining, but do me a favor, mute. Thank you. I will be looking for price to deliver back into this fair value gap. Specifically the lower end, I'd be looking at, because we do have this volume imbalance here, which is a daily opening gap, as well as it's stacking with another opening gap. So this is going to be a relatively sensitive area in price. Let's see where that puts us here inside the fib. Still outside of OTE, so OTE is out of this question for here, at least on this time frame. But I will be looking at the 1088 area to be delivered at if we're not coming down, if we're not making leaps and bounds towards this sell side liquidity pool. around Wednesday. So opening of the week, I'll be looking for bearish dollar. Midweek to the end of the week, I'll be looking for bullish dollar based on the fundamentals. Moving into NAS. Get rid of this real quick. So NAS weekly, we are still oscillating from outside to inside liquidity, and we've been doing that for months and months and months now. As we see from here, we took out this sell side liquidity pool, outside, inside, outside, inside, outside, inside, and now we're going to be oscillating. My macro target is going to be these, this trend line liquidity and this low. That is my weekly and monthly draw on liquidity. So this is where I ultimately think market is going near term. In the next 2 to 3 weeks, I think we'll be down here. If not this week, we'll see what FOMC brings and what has already been priced into market sentiment. But bringing it down into the daily time frame so we could frame our weekly bias, right? And I already have a piece without. I'm just going to hide this in this time frame. My target for FOMC is going to be obviously we have this full daily fair value gap that needs, it was partially mitigated prior to our, the end of the week dump. But we do need to come back into this area. I'm assuming, using my dollar bias, I'm going to assume that this is going to be a daily swing low for at least a little bit before it gets violated. And we're going to see price push back up into this inefficiency. Narrowing this down, I'm going to be using premium and discount here. So this is going to be relatively OTE that I'm looking at. Stacking confluences, I see, this daily fair value gap with a balanced price range here. So this should be a sensitive area for price to come up. So again, I want to see price deliver here early in the week. Come news time, I want to be either right around this area or already inside, accumulating in this area. And then possibly like they throw a wick up, tag this order block, and then start to create our midweek shift and then expansion. That is what I'll ultimately be looking at. ES is relatively the same thing. We're still inside this weekly order block. I don't really trade ES nearly as much as I do NQ. I'm pretty steady with NQ. But I'll be looking for the same thing relative to this range, right? I'm going to use this as my swing low, even though it's not confirmed till tomorrow's daily close comes in. And I'm going to assume with fair certainty that this low will not be violated early in the week. And using this again, OTE, balanced price range inside the daily fair value gap, or even just premium. It doesn't need to get to OTE here. NAS is a slightly different story. But yeah, this is going to be where I'll be looking. So Monday, Tuesday, I want to see these equal highs taken out. Wednesday, I want to be creeping into this area. Like I said, for NQ, I want to be creeping into this area. So news can take us, news volatility can take us, and they can start sweeping areas of liquidity up here, and then give us our weekly expansion to the downside. Weekly target's going to be previous week low. And then here you see you have, CE of this order block, and Q has the same thing. And then I'll be shrinking timeframes to look for smaller objectives as well. So that is indices covered. Let me go over majors. So I trade dollar corresponding pairs. I don't trade this or this. So I trade AU, EU, GU, and UCAD, and then I use EG as a reference sometimes, not too often. So AU. AU is actually very clean right now to me. So similar to indices, AU's been a strong downside trend. We just tapped into a pool of outside liquidity. So we can expect next, naturally, we're looking at inside liquidity. I have stacking confluence here. Let me clean this up a little bit. This is going to be our new range. So premium puts us right at this 4-hour BPR, inside a daily BPR, inside a daily fair value gap. So again, stacking confluences in this area. So 6.68 for me is going to be an area of interest. If we are bullish early in the week, I'll be possibly looking for setups. I won't be too eager to execute this week. Obviously, with FOMC, we don't know how conditions are going to be. I typically stay away from Mondays, and then the day before a news release like FOMC, Fed funds rate, CPI, could be accumulation, super choppy. We don't look respectable. I'd be watching, absolutely, but I'm looking for price ultimately to be here by midweek. Of the majors, I think this is the most attractive to me right now. But we'll go through EU next. For me, EU is kind of in no man's land. We'll hop up to the weekly real quick. We do have this weekly fair value gap that we're coming back inside of, so outside, inside. Here we have outside liquidity, so we're taking inside liquidity, but the daily is just kind of, floating in this range. So I will be looking, just waiting here. If I'm going to be watching one major, I'm going to be watching AU. It's just super clean to me. It's not stuck in between, a range. So, and EU's kind of been the odd one out because it's exceptionally strong right now. It really doesn't like being around parity for the first time in borderline 2 decades. GU is super clean. GU is running the same case as AU. AU and GU both just took outside liquidity, as we see here, and this is a very long time ago liquidity pool. 2020 lows, so this is a big liquidity pool, so we need to seek inside liquidity. Weekly did just balance that here. We actually had an outside week here, so I mean GU really could just dump. Inside liquidity, move this. So GU actually looks like it's the weakest of the three. Weekly has been balanced on the inside. So this candle right here, I'll be looking in early in the week. If we can come up here, this is what I'll be looking for, which will also line up with this breaker right here. This is fairly large, but I'll be looking at this low right here as a stack of confluences. So 1.15 is my area of interest. Going into midweek, same thing. I will be watching for early week trade opportunities, but I won't be too aggressive. As is, I'm already only taking 1 to 2 trades the past couple of weeks, and it's really taken my win rate and just my confidence in my executions and mental stability while trading absolutely through the roof. So I don't plan on changing that. But if I see something, I will be shooting. UCAD. Let's mark this. What's the range here? 132. That could be done by midweek. So I'll be looking here. Midweek, this is a weekly order block. That price could possibly be drawn into retest prior to the news. I do think weekly draw. This is our draw here. Now we could even see higher like this, but I'm gonna be doing the first one just because low hanging fruit, easiest targets. It's still a decent range to fill. Coming from my POI would be here. Let's shrink down into the daily. So same thing that I mentioned earlier. referencing like elasticity of order blocks, we can dig into this weekly order block coming into this fair value gap, which needs to be rebalanced, as well as this daily BPR, which will be, I think, an OTE now that we're moving the range. Yeah, so this will be OT. So that'll be what I'm looking for UCAD. Again, all these are going to be relatively similar because they're all derivatives of my dollar index analysis. Now, what I'll be looking for early in the week to invalidate that is, and I'll do this on indices, right? So if we see, because this will be my main focus, if we see this low taken out prior to us coming back up, that'll be an indication to me that this will be a open, low, high close week, as opposed to open, high, low close this week. So that's what I'll be looking for as, the contrarian early in the week. If I see this low taken out prior to us pushing back up into this internal liquidity, that's a sign to me that the market wants to liquidate people who are already long and then, possibly have an extended run back up. It is important to frame your ideas that way. So you're not only looking for one instance all week, because then if it doesn't happen, you have to reassess later in the week. You might not be in tune with the market, which could make the whole week shot for you. So it's always important to know what are your invalidation cases, and that would be mine for pretty much most of the analysis I just gave you. Is if we come down to these lows, or if DXY comes back up to this high prior to coming back down into this imbalance, that'll be, sign enough for me that, we're going to have an extended pullback, and then I could look into this area, right, more seriously as a longer term objective. Possibly the next week, the monthly objective could be coming back down into this area. So watch for that early in the week. And that'll help you frame possibly, what Fed funds rate will lead us in terms of market direction moving forward. We are in the third week of the month. I know the first week was, really short. We are on the third week of the month though, so on the monthly time frame, monthly expansion is going to be coming around this time. So reference your monthly opening price where you're at in reference to monthly opening price. Same thing, power of three, we want to accumulate above monthly opening price and distribute below monthly opening price if we're looking for bearish expansion on the monthly candle. That about wraps it up, everything I have. If you guys want me to go over a pair, you can put it in the chat. If you have a question, you can put it in the chat. We do have, I think, like 15 minutes left for the Zoom. So I'm glad to fill up the time. If you guys want anything in addition, don't be shy. We did go in through indices. Yeah, I plan to do this on a weekly basis. This isn't something I planned for. The recording will be posted, so don't worry, you will be able to see it. I do not trade DAX, but I can take a look at it. I know a lot of index traders also trade DAX. I just don't trade it because it likes to move in London as well as in tandem with the US market. So we can go through that real quick. I'm not going to tell you that I'm going to be entirely confident in my analysis in DAX. I don't know how it behaves. I haven't studied it, yeah, and we can go over AMD real quick shortly after that. Just let me get to it. But yeah, speaking to this, I'll be doing this weekly. This is not something I've prepared for. This is simply how I sit down and go through what I trade, how I expect. So just taking you through my thought process, and that will help you moving forward. Can you turn the symbol in your status line? Oh, can I put the symbol in my status line? I actually took it off because it just like kind of distracts me. You do have the annotation here at the bottom of the screen about what this chart is. So let us get into DAX. Do you think ES will fill imbalance 3690 to 4000? So you're looking at this chart, 3690 to 4000. Did I read that correctly? 3690 to 4000. Yeah, you mean 3960? Yeah. Yeah, absolutely. Yeah, absolutely. So for ES, since I have this chart up, for me, this really draws attention. I really like, you have, daily BPR, volume imbalance right around equilibrium. So this is really where I'm looking at ES. Same thing as SPY here. There's just no volume imbalance. I can just be a little more specific here. This volume imbalance inside of BPR, this is really what I'm looking at, 4020. I mentioned that on a thread on Twitter with future options as my possible high of the week. So I really just look for stacking confluences. I'm not someone who like looks at one thing, gets my heart set on one thing. If I see an area where price is printing multiple PD arrays, volume imbalance, daily BPR, daily fair value gap, above a liquidity pool, right around equilibrium, like where I'm seeing multiple things just like fall into place, that's the area I'm going to be looking for. Pair that with, a liquidity pool and a time of week, that's really going to, help you start framing your weekly expansion better. Also, huge thing that transformed my game was just understanding the concept of outside liquidity to inside liquidity. Like that alone, and being able to come to a context on multiple time frames, because this happens on all time frames simultaneously. Just so you guys know, I'm framing things on like the weekly and daily right now, but it all happens on the 4 hour as well. Obviously those lower time frames are subordinate to the higher time frames. So you think in order to US 500 get inside of BPR? Yeah, so like I said earlier in the call, DXY, I am bearish early in the week because I think everything that's dollar related needs to come back into inside liquidity, which is going to be these daily fair value gaps that you see on, dollar index, both indices, AU, EU, GU, like all these, well, maybe not EU, EU is a little bit weird right now, but all of them need to come back up to fill imbalances, possibly find equilibrium and the PD arrays around there. I am going to get into DAX real quick. I don't want to get too caught up and not get to someone's question. That is, I'm going to use JER 30. I'm sorry. Clear. I don't have any drawings here. Okay. So just looking at this, my draw here, right? Let's go to the weekly, right? Draw is these lows and these lows. It's like the same thing, outside to inside, moving in tandem with our indices, right? So these are your sell side liquidity pools here and here. Rebalance this fair value gap and this volume imbalance. And order flow is clearly bullish. You have shift here, rebalance, right? Shift. Actually, DAX has no shift yet, which is something to watch, right? Because there is no daily. This is a weekly. There's no. Let's go to daily. No swing low here yet. So DAX, I'm just going to piggyback on our indices. DAX hasn't taken out a swing low yet here. Last daily swing low is here. So this is the area I'll be watching. I do think the draw will be here. You're already closing below, most of this candle. So that is a good sign for bearishness. Same thing. Also internal stop run. This come back to equilibrium. 1 second. All right. So this is this price range is rebalanced, even though you still have this area left open. This is going to be a breakaway gap. We'll come back to that later. Framing bearishness, my draw is going to be these equal lows in the daily, and then this low down here. Yeah, no problem, guys. This low down here, early in the week. Yeah, see, this is just not as clean as say NAS, for example. NAS is just so clear. To me, this just I'm not a huge fan of this, but we do have, again, you're making equal lows here. Liquidity still resting here. I will say you should know this is definitely a weekly order block that is going to, I would watch the 50% level, which is going to be around this 12,200 area as your downside target below here. And then obviously watching how you react there into this sell side liquidity pool. Again, I do think, this sell side liquidity pool and even this sell side liquidity pool, COVID lows are not off the table for anything. And I can actually get into that real quick before I frame a quick AMD situation for you guys. But why do I think COVID lows are not off the table? And this is like more of a fundamental approach to my, like, how I digest everything in the market. The US dollar supply, total monetary supply, was increased by 40% through quantitative easing throughout the period of COVID and thereafter. Right now, if we look from the highs to the lows, where does 40% put us? Right, 40% puts us right here, right in the COVID range. So COVID highs, right, 42%. 42% we sell off is required to mitigate the 40% increase in monetary supply. So like all of this is like fake to me. All of this is fake because it's fake money. Money got printed and pumped into the market to artificially prop it up. It's just, for me, it's not a coincidence that the monetary supply was increased by 40%, and 40% puts us right back at COVID highs, pre-COVID highs. That's just, for me, it's too coincidental for me not to be looking here. And then if we're coming down here, liquidity pool, that's my target. Let me quickly frame accumulation, manipulation, distribution. So it's just, the same thing how I frame my week, looking at, where I'm expecting weekly expansion, right? You guys know I'm looking for, weekly expansion to the downside. But if I'm expecting weekly expansion to the downside, that means we need to have an accumulation above weekly opening price, right? So, and that fits with all the analysis I've given. Why would if I'm expecting weekly opening to be bullish, right? But I'm expecting the weekly expansion to be bearish, I'm framing these high time frame PD arrays as my accumulation above opening price. And this happens on all time frames. If you want it to be on the 4 hour, the daily, the weekly, the 1 hour, if you shrink to a small enough time frame, this concept happens everywhere. And it's like the same thing as like a sell model, like a market maker model that we see from ICT. What does ICT's sell model look like? Where's the path tool? I'll draw it out real quick. If we're gonna make a sell model, right, we have our original consolidation, right? And then we have our manipulation, where we come up into a high time frame PD array or liquidity pool. And then what do? We shift, we make our sell side of the curve, and then we take out the original side of the curve and expand. That's a little sloppy, but you get the idea. So this concept right here, this is the same thing as AMD. It's just worded differently. And like that's like all the concepts are like literally the same. Accumulation, manipulation, distribution, power of three, market maker sell model. It's all based on the same principle that, if I'm looking for sell side expansion, I need to come up and grab buy side liquidity and induce people into buying prior to the expansion, because this is a zero sum game. So you're looking at this, it's just fractal, right? So I'm looking to come up here, so I want like a 2-leg move, whether it be on like the hourly or something like that. I want a 2-leg move up here. And this is just like all obviously like you see here, accumulation, right? You have your buy model, 1 leg, 2 leg, taps into a weekly PD array, and now we have 1 leg of distribution, 2 legs of distribution. So what's the target if we're looking for weekly and monthly bearish expansion? These lows, and I framed that earlier in the call. So it all ties together, and being able to look at a daily and weekly time frame, even a monthly time frame, and picture just outside to inside. Just pick a direction. If look at what we've been doing, down, down, down. Right? Daily time frame, down, 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 down. So don't change your bias just because you see price going up a little bit. That would be SMR in the high time. Yeah, exactly. Or a liquidity pool. It doesn't have to be a PD array. It could just be a high time frame liquidity pool, like right here. I don't know that there's no PD array here, right? But you took out this liquidity pool and then you just faked out sellers one more time before you had your shift. And then from that shift, this is your order block, tapped into it here, run PD array. Now, ultimately we're running back. This is inside on the weekly time frame. We're running back to outside on the weekly time frame. That's here. So being able to pick a direction, high time frame, translating that to a lower time frame, if you're working on the weekly, translating it to the daily, you'll be able to frame what you're expecting throughout the week, and you compare that with your high impact news events, like I did at the beginning of the call, looking for FOMC to deliver into this area on NAS, right? I'm expecting accumulation above weekly opening price. So weekly opening price is going to be around 11,900, right? I'm expecting us to come up in the beginning of the week. That's your accumulation and manipulation, accumulating above opening price. And you guys do this on a daily basis as well. That's why we annotate midnight New York time and 8:30, because that 8:30 is also important, because that's your pre-New York for indices. That's your pre-New York manipulation, right? You want to see a opposing liquidity run into a PD array if possible, right? So that's how you have to frame your daily bias. Your daily expansion, is the same way. There are going to be times where it doesn't happen like this. You can catch like this, and there's just nothing. Like, look at this run, just 3 consecutive days of just straight down. Look how small. Look how small these manipulations are. Look at that wick. There's no wick here. So it's not going to happen every time, because the weekly and the monthly timeframes do have a huge part to play in this. But this is what you're going to be looking for on all timeframes. And that's going to help you frame your daily bias, your weekly bias, intraday bias, 4-hour bias. It all happens. It's fractal. It happens on all timeframes. You can have a 1-hour model that you start looking to execute on the 5-minute and 1-minute. So inside of 4-hour and daily PD arrays, right? So that's how you frame analysis and execution. That's what I do just in the background. The time is just about up, you guys. I hope this was helpful for you guys. For those who came in late, the recording will be posted on the YouTube. I just have to create it and then upload this. But yes, I will be doing this weekly. When I do have time, I'll sit down and do Q&As with you guys, kind of like I did at the end of the session here. But yeah, good luck this week. Don't be too antsy to get into the market. This is going to be a very volatile market like we saw last week. So yeah, let the moves come to you, and good luck. I'll talk to you guys periodically throughout the week. Thank you guys too. Last question. To make models understanding better, would you suggest any video? I don't have a specific video offhand for you, but I will throw a couple suggestions on this last piece I just talked about in the Telegram group for you guys to watch. All right, that'll be it for me. You guys have a great evening, and I'll talk to you guys soon. Thanks for coming out.